So the SBA came out this week and said that PPP is done. The SBA said that it has stopped accepting new PPP applications from most lenders. This past Tuesday, the SBA informed lenders that the PPP General Fund was out of money and that the only remaining funds available for new applications are $8 billion set aside for community financial institutions, or CFIs, which are institutions and lenders that specifically work with businesses in underserved communities. But other than that, PPP Draw 2, donezo. But all is not lost, dear small business owners of America. If you missed out on the PPP, or if you did not qualify for PPP Draw 2, don't lose hope, because you may still qualify for the employee retention credit on all those wages you didn't claim for PPP forgiveness. This employee retention credit could be worth up to $28,000 per employee. And yes, even if you got PPP money, you can still get a piece of this employee retention credit cake. This is big. A lot of small business owners don't know about this employee retention credit, or they might have heard about it, but they don't know much about it. Even many tax professionals don't know the ins and outs of this thing because it's new. And a lot of these changes that are extremely advantageous to business owners happen in the middle of tax season. So in this video, I'm going to dig into the employee retention credit, why it's so lucrative now in 2021, more lucrative, in fact, than it was back in 2020, 5 times more lucrative at least. So even if you don't own a business, be sure to share this video with business owners you know. This video could literally be worth tens of thousands of dollars for them. And if you are a business owner, and after you watch this video, you want to talk with me and a member of my team, either a CPA like myself or possibly an EA, shoot me an email, taxes@loganalec.com. Tell me a little bit about your business and your ballpark year-over-year revenue, and let's see if we can get some more money back in your pocket, because you can take this credit against your payroll taxes today by reducing your required employment tax deposits. You can even request an advance payment of the credit using IRS Form 7200, advance payment of employer credits due to COVID-19. Okay, you don't have to wait till next year to get this credit. You can get this today. I'm not going to get into the intricacies of that form or the Form 941 and amended 941, so all the payroll stuff, because that's the stuff your CPA should worry about, okay? In this video, I want to tell you what you need to know. So you can go to your CPA and say, hey, what about this employee retention credit thing, right? Let's talk about this, right? Well, ideally, they would be telling you about it. Anyway, I want you to be informed and take ownership of your own tax situation, of your business's tax situation, so you can generate more cash flow in your business and more wealth for yourself. All right, now let's dig into this and let's talk about the employee retention credit, or the ERC, as some of us in the business like to call it. Before I get into it, I want to say that nothing in this video is to be taken as legal or tax advice. This video is for general informational purposes only. Yes, I am a CPA and a tax professional, but I am not your CPA. I am not your tax professional, unless, of course, you have engaged my firm as such. Another disclaimer here. For purposes of this video, I'm assuming that if you're watching this, you are a small business owner, okay? Which for employee retention credit purposes means 100 or fewer employees for purposes of the 2020 credit, and 500 or fewer employees for purposes of the 2021 credit. If you have a company with over 500 employees, I imagine you have in-house counsel, in-house CPAs and accountants who are hopefully on top of this stuff. But I'm here for you small business owners, right? You may work with a local tax professional who is so neck deep in tax returns right now because the government extended the tax deadline to May 17th, right? That they just haven't had the time to really dig into the weeds here on this extremely lucrative employee retention credit like I have. Let's get into it. Why is this credit, this employee retention credit, so much more lucrative for businesses owners in 2021? Why weren't we really talking about this in 2020? It's been around since then. It was first instituted by the CARES Act, but why is it getting all this buzz now that it wasn't last year? Well, let's back up. Yes, the employee retention credit has been around since the CARES Act. That was passed over a year ago in March 2020, but the employee retention credit didn't get much love last year in 2020 because of the PPP, the Paycheck Protection Program. Originally in 2020, if you received a PPP loan as an employer, even $1 of PPP money, you were not eligible for the employee retention credit. But the stimulus bill passed in December, the Consolidated Appropriations Act, as well as the American Rescue Plan Act passed earlier this year, made changes to the ERC, making it much more attractive. Basically, the employee retention credit had a glow up between 2020 and 2021. It went from the, nerdy girl with unkempt eyebrows and thick glasses and her hair up in 2020 to the belle of the ball for business owners in 2021. Why? Why is the employee retention credit so much more attractive now thanks to these recent pieces of legislation? I'll tell you why. A few reasons. Reason number one, the employee retention credit for both 2020 and 2021 is now available to PPP recipients. But of course, you can't double dip. You can't get, PPP for the $100,000 you pay to your employees and then turn around and claim the employee retention credit on those wages as well. The government doesn't look too fondly on paying your payroll for you through the PPP and then you turning around and claiming a credit against the taxes you pay the government on those wages that the government paid for you. So that makes sense, right? Now, there's some planning here. If you got PPP and if you were also eligible for the employee retention credit, then when you do your PPP forgiveness application, you need to choose the best covered period that will get you full PPP forgiveness, but also maximize your employee retention credit. Also, for PPP forgiveness, you want to fill up that payroll bucket with as many costs as possible that don't count for employee retention credit purposes. For example, you can't claim the employee retention credit on state unemployment insurance contributions, but state unemployment insurance contributions count toward PPP forgiveness. See? So you'd want to dump all your state unemployment insurance contributions on your PPP forgiveness application to leave as much ordinary wages as possible to take the employee retention credit on them. See? So this can get a bit technical, and it's very situation specific in terms of optimizing PPP versus ERC. My firm, of course, has tools to figure this stuff out for you. I'm not going to dig into all that analysis here. Just know that you really have to do the math when doing your PPP forgiveness to make sure you're not leaving anything on the table in terms of the employee retention credit. Another thing to note is that you can't deduct the wages you claimed the employee retention credit on. That makes sense as well, right? Why should the government give you a deduction for these wages that they already gave you a credit for? So essentially, the credit is tax affected in that sense. All right, sorry for getting a little sidetracked there and carried away. I just love talking about this stuff. But let's move on to reason number 2, why the employee retention credit is so much more attractive now than it was a year ago. And that is that it is easier to qualify for the employee retention credit in 2021. In 2020, for a business to qualify for the employee retention credit, you had to show a 50% decrease in gross receipts compared to the same calendar quarter in 2019. But in 2021, for a quarter to qualify you for the employee retention credit, you only need to show a 20% decrease in gross receipts compared to the same calendar quarter in 2019. So this means far more businesses will qualify for the 2021 credit than the 2020 credit. So if you looked at the ERC in 2020 and you didn't qualify for it, don't write it off for 2021. You just might qualify. Also, for 2021, for any quarter, you can elect to use a look-back quarter, meaning that, for example, even if your Q1 2021 gross receipts aren't at least 20% lower than your Q1 2019 gross receipts, you can compare, for purposes of determining eligibility for the employee retention credit for Q1 2021, you can use Q4 2020 compared to Q4 2019. Implication here is that if you qualify for, say, Q1 2021 based on Q1 2021's gross receipts, you'll also qualify for Q2 2021 since you qualified in its look-back quarter of Q1. Same thing for Q2 to Q3 and Q3 to Q4. So basically, if you just qualify for Q1 and Q3 2021, you'll also qualify for Q2 and Q4 based on the look-back. Also, even if you didn't have a sufficient decline in revenue, you can qualify. You can still qualify for the employee retention credit if you were required to fully or partially suspend operations in your business during any calendar quarter in 2020 or 2021 due to government orders, right? And in this case, you would be eligible for the employee retention credit during that period of full or partial shutdown. Common example, you own a restaurant and the governor of your state signed an executive order stating that you need to shut down indoor dining. That is an example of a partial shutdown. All right, so we've talked about how more businesses are eligible for the employee retention credit now, thanks to these new laws. These new laws that made PPP recipients eligible for the employee retention credit, though not on the same wages, right? These new laws made more businesses eligible, right, through making the decline over 20%, that threshold, rather than 50%. But get this, the 2021 credit is also much more lucrative and valuable than the 2020 credit, okay? For 2020, the ERC was equal to 50% of all qualified wages for 2020, okay? ERC was equal to 50% of all qualified wages you paid to employees between March 12, 2020 and December 31st, 2020, with a limit of $10,000 in wages for that entire time period, okay? So the maximum 2020 credit per employee was $5,000, 50% times $10,000. Not bad. But that's nothing compared to the 2021 credit, because for 2021, the credit is equal to 70% of qualified wages per employee paid from January 1st, 2021 through December 31st, 2021, limited to $10,000 in wages per employee per quarter. So for 2021, the percentage is more, right? 70% versus 50%, and you can take it up to $10K in wages per employee per quarter, not for the whole year. So we're talking about a maximum credit of $7,000 per employee per quarter. If you're eligible for all 4 quarters, right? That's 7,000 times 4 is $28,000. Yes, the maximum 2021 ERC is $28,000 per employee. That's huge. That's a godsend to many business owners right now. So you see what I mean, right? How the employee retention credit has kind of gone from this, ugly duckling in 2020 to this beautiful swan in 2021, right? And by the way, qualified wages, they include employer-paid health insurance premiums. So this credit can be huge for you and your business. This is a real boon. If you want to have a conversation about this and about my firm's services, shoot me an email, taxes@loganalec.com. Let's chat, you, me, a CPA or EA, and my team. Let's see if we can work together. But before I close out this video, I want to address one pressing question, and it's this. Can you take the employee retention credit on owner wages? For example, let's say you have an LLC. It's owned entirely by you. You made the S-Corp election on that LLC, and as you should, you pay yourself a reasonable salary. Can you take the employee retention credit on the wages paid out of your S-Corporation to you, the 100% owner? Now, this is a big debate in the tax professional community right now. I'm not going to, hang my hat 100% on any one position here until we get more clarification on this from the IRS and or Treasury. But if I lean one way or the other, I would lean in the direction of saying that owner wages, insofar as we're talking about someone who owns more than 50% of a business, do not qualify. I don't want to get too technical here, but Section 2301 little e of the CARES Act, which is what created the employee retention credit, says that for purposes of the employee retention credits, rules similar to the rule of Sections 51 little I1 and 280C little a of the Internal Revenue Code of 1986 shall apply. Don't get caught up with the 1986. That's just the last time the Internal Revenue Code had a major overhaul during the Reagan administration. So it's just referred to as the Internal Revenue Code of 86. Okay. The important part here is those other code section references. Okay. Let's start with 280C little a because that's the easy one. This is just saying that if you get a credit on some wages you pay in your business, you can't double dip and take a deduction for those same wages, right? We already talked about that. But now let's talk about Section 51 little I1, which says no wages shall be taken into account with respect to an individual who bears any of the relationships described in subparagraphs A through G of Section 152 little d2 to the taxpayer, or if the taxpayer is a corporation, to any individual who owns directly or indirectly more than 50% in value of the outstanding stock of the corporation, or if the taxpayer is an entity other than a corporation, to any individual who owns directly or indirectly more than 50% of the capital and profits interests in the entity. So let's focus on the clause that says if the taxpayer is a corporation, because in this example, we're assuming an S-Corp taxpayer here, which is the most common type of taxpayer to ask this question. So this is saying that you don't take into account wages with respect to an individual who owns directly or indirectly more than 50% in value of the outstanding stock of the corporation. That seems clear to me that owner wages do not qualify. Now, some tax professionals are looking at the Employee Retention Credit Qualified Wages FAQs on the IRS website, okay? And they're looking at FAQ 59, which says, are wages paid by an employer to employees who are related individuals considered qualified wages? And they're saying, look at the answer here. It's only these relatives whose wages don't count. Okay, and they say, well, the IRS didn't specifically say owner wages or spouse of wages paid to owner spouse wages don't count here. So bada boo bada bing. Therefore, owner and spouse wages must count. To that I say, look, the IRS website is not the tax code. Okay, if there's a disagreement or discrepancy between the IRS website and the tax code, and there are plenty, believe me, the tax code wins every single time. You can't say, well, it said such and such on the IRS's website, and in this case, it's an argument by omission. You're saying, well, the IRS website doesn't explicitly say that owner wages are excluded, so therefore they must be okay. No. Look at the codes and the regs as well, though, of course, the code is more authoritative than the regs. But on the other hand, though, okay, and this kind of helps the other side here, the section in the CARES Act itself is admittedly vague. All it says is, for purposes of this section, rules similar to the rules of Sections 51 little I1 and 280C little a of the Internal Revenue Code of 1986 shall apply. Rules similar to, right? What does that mean? It's up to Treasury to figure this out. So my take on this right now, right? It's not 100%, but my take is that unless the IRS comes out and definitively says otherwise, I'm going to assume that you can't take the employee retention credit on owner wages, right? And it's the same, if it's a husband-wife owned business, let's say both own 50%. Well, sorry, you're related, so neither of your wages qualify either, nor relatives you employ, children, siblings, etc. Okay. All right, folks, that's what I have for you today. Of course, I'm just scratching the surface here with the ERC, especially with the interplay between the PPP and the ERC. If you'd like to speak with me, CPA or EA on my team, about the ERC, be sure to email me, taxes@loganallen.com. Tell me a little bit about your business, your year-over-year revenue. We'll see if working together would be a good fit here to put some more money in your pocket. I also have more tax videos right over here and right down here as well. Be sure to check those out, and I'll see you in the next one. Keep grinding, all you small business owners out there. You are what make America great. Bye-bye.